Hey folks, welcome to Monday, the 13th of June 2022. So hopefully everyone is holding their calm this morning as markets are selling down. You're seeing DAX, we've just been down about 2%. SPOOS has been down 2.5%, currently 2.3, and Dow 1.8. You're seeing the bund also off by 0.4% so far at market. We were down probably at least a half a point there on the or on the bund. But really, why are we down here? Well, we've had 40-year. We're back to where we were 40 years ago on inflation, 40-year highs. On the CPIs that we got out of the US on Friday, leading to very weak markets all day Friday. You're seeing oil is no refugee from this either, and the dollar is absolutely screaming. Currently up 0.4%. We've been up a bit higher this morning so far, and so no refugees anywhere really from that strong dollar. So what we're going to look at really today is we're going to look at the SPOOs, the S&P 500. We're going to look at oil, and we're going to look at the dollar, because really the dollar is just going to be driving so much of this picture as we go forward. So looking over onto the charts, as you can see, this Dixie on, let's have a look at this on a bigger chart in the weekly. So we're really up here. This is we haven't seen these highs on the dollar since 2017, and we're actually above there right now. So where can we go to? Well, I don't know where we can go to. Obviously we have the high of May this year, 105 spot 0204s. We've had a massively deep pullback there in the dollar and just such strength coming out. So I think, should we trade in the 105s? I think we're going to trade higher. So we're currently trading above the high of the 16th of May. And let's see if this dollar strength can continue. I think it can. I think there's a lot of risk in these markets at the moment, and I think the dollar will be pricing that in. So kind of looking at the dollar on the 60-minute here, we are not too far from that 105 area. Going to take some of these trends off here for now. So yeah, that 105 spot 0204s, we're really almost there right now. And so if we are going to turn down from there, it's going to be a bit late stage for you to be barreling into longs on the Dixie. I think there should be some tolerance within the banks and the larger traders in the currency space to allow for the dollar to get up to at least the 105s, and then maybe get back into the euro longs from that point. But certainly this morning and on Friday, you are going to see a bit of sweat on the brows of bank currency traders. So yeah, just be careful out there, boys and girls, if you are kind of barreling into longs on the Dixie. All right, so that's Dixie out of the way. SPOOs, really not looking good at all. I think we can see ourselves trading some serious downside here. Morgan Stanley, I think, put out a call that recessionary lows for the SPOOs at 35.40s, and that's going to be in and around this area here. Now, what you're looking at is all the way back to, actually, you can go even further and go back to 1997 is what you're looking at, all the way on the SPOOs here. And, what a period we've been living in. Now, just to kind of show you what happened on COVID, this trend, right, that we have, which I call a mother uptrend here from 2009 lows to the 2011 lows. See where we bid from there on a flush out, but see where we bid from in April 2020, 1st of April, just bang, up we go. About 20 days later, I think we went below zero on oil. But, just massive growth since then. Now, for us to come back on trend, well, first of all, from that low on that trend to the high is about 103% gains. From where we are now back down to this trend is about, well, I think we're looking at, get the chart calculator on here, but I think we're looking at about 27% to come off on those markets. Do I think that's going to happen? I don't think so. I don't want to be sensationalist here at all. but I just want people to be aware of where we do sit in the SPOOs contextually. We're giving it up on the 3809s area, and giving it up here, it's still quite a bit of a ways to go down to the pre-COVID high 3310. So all of this frothy gain that we've seen since stimulus checks and whatnot, was it all just a dream? Are we going to come back to 33s? Maybe. Now, is that a trade that's going to unfold today, tomorrow, over the next quarter, the next 2 quarters? I don't think so. I think it's going to take probably the rest of the year anyway to see how deep this thing wants to go. So kind of coming back to something a little more suitable for what we're doing here is to check out on the weekly bars. We're currently, as I said, trading 3809s. It's kind of this low of the March of this year, kind of coming in there. It's actually the low of the 22nd of the week of the 22nd of March last year. So can this market go lower? Absolutely. Can it go to 36.14's half? Absolutely, in my estimation. It's been pretty decent support seen from there, actually. And on the way up, it's the only stair step here on the way up where we broke above. All right, we broke above. I'll zoom in here. We broke above. All right, we broke above this area, which was the high of the 9th of November 2020. We broke above and then found pretty decent support to then launch up into the all-time highs from where we are. Well, yeah, from here up to here. Right. So I think coming down here, it's deep value territory for the SPOOs. I think you're just going to have retail loading the boats up at 36.14s. You're probably going to see quite a lot of money coming in to try and sell this market down in the US session today. Are there dip buyers for this market right now? There's always dip buyers, but are they going to be alive this time next week? I don't think so. I think we departed some really seriously good areas for buyers to come in. So as in, they're not there. And, for us on Friday, we were looking at this 3909s. This is sort of a really good value from last year here. And you can see, how many people were loving that this morning and late on Friday. Not many. So down we go. The gap currently exists above here on the SPOOs. All the gaps are in yellow. On the DAX, funnily enough, this morning we actually rallied up to the bottom of the gap and then have sold down since. I think buyers are coming in now from 13,476 on the DAX, sort of a value area, nice little area. So can we get the same on the SPOOs? I haven't actually checked that yet for the SPOOs. But this whole area, we may auction back up. I don't know if we're going to leave this gap unsolved here. But I'm just really trying to contextually give you, a view of what's happening. VWAP, again, taking sells there at 8 a.m. off the open. So we had a little bit of a pre-market drive on DAX and SPOOs back up to the VWAPs, and then, just folding back down now, right? So, be careful out there. I mean, I think I'd rather wait for this selling to resolve itself coming into the US session. If we are still holding S1 3811s, I like the longs. I'm potentially paying for not only the gap low to tag, but also for the gap to fill and pull back to 3909s, because I think 3909s is just such a big area. Such a big level that we generally, and I see this in the markets a lot, but not often on a value low as big as this. You do, when you depart those areas, it tends to come back for the check, and if they're and then maybe load up for the bigger push over the following week or two after that. Anyway, that's Dixie and SPOOs so far. And then oil. Yeah, oil, oils, we might be kind of down. Well, we were down about 2% on oil this morning. I still think this thing is quite well supported where it is. The refinery capacity is the big buzzword in oil trading at the moment. There is none. is the basic problem right now. Everyone's refining as much as they can everywhere. China does have 3 million spare capacity refinery at the moment. They're not going to be turning that on though, because they've just essentially turned it off over the last couple of years. So I don't think they want to restart those fires. But I think a pullback somewhere into maybe 112s could be on the cards. Looking on the 60-minute daily picture here, actually, we'll just turn these drawings back on here. You got the invasion top still protecting the entire market at 95.75s. It is quite aggressive. Essentially, I think we've broken away from the 106 sort of range highs. So a pullback to here is still protected for the bulls. Also the 111.25s still very protective. Buyers coming in there, quite handsomely last Thursday. 2 Thursdays ago. So yeah, look, I like the longs. Should we come back to 113s? I think I'd be a buyer here. And then any trade below 111s, I'd be leaving this thing well alone and standing out of the way. So, all right. It's going to be a hell of a day. A lot of selling pressure in these markets today. Just be careful out there. This is the type of day that can really, take your whole account away from you if you get too busy with it. So maybe it's a day for sitting on the sidelines and watching. I think some really good trades will present themselves about 3 o'clock, maybe 3:30, a half hour after the US Open. So do be careful. All right. We'll talk to you soon. Hit the like and subscribe button. Cheers.